This is Chuck Carnaval. I'm the Chuck in the Markets Up Chuck. And today's blog was titled "Here's to Our Health." And there's obviously an awful lot of discussion and politicizing going on about the healthcare reform, and there's a lot of debates and discussions, and the bill changes. It seems like almost with every passing day, and what is being presented changes. But the bottom line is, if there isn't a complete public health plan, then there could be a benefit to some of the major health insurers. So I thought it'd be interesting to take a look at it, because obviously with so much uncertainty going on, these companies are trading at historically, as you can see, low levels. Here's WellPoint, one of the major players, and you can see since 2002, the company's earnings have been very strong up until 2007, or the end of 2007 into 2008, where the recession took its toll. But I do want you to notice that this company's normal price earnings ratio has averaged about 15 times earnings. It's currently trading at 9 times earnings. Has very little debt on the balance sheet, and even with all said and done, has a very good track record relative to the market. The forecasts right now call for 10% growth, but keep in mind there's an awful lot of uncertainty in forecasts today of these companies. This is a $26.5 billion market cap company. A larger player is United Health Group with almost $36 billion in market cap. But I want you to again notice that, thanks to demographics and the graying of America and the aging world population, that obviously United Healthcare had strung some really good numbers together, again, until the recession. But now there's once again a lot of uncertainty. We have another company that's traded at, almost 20 times earnings. Historically, you can now be bought for half that amount. Again, has a good, strong balance sheet and is well positioned, and is actually a very well diversified insurer, probably the most diversified of the group. But yet, it is forecast to grow at 12%. But keep in mind, there's so much uncertainty in those forecasts, and it also has a very good track record relative to the market. It's done better than double what the market has over the last 15 years. And then another well-known name in the private health insurers would be Humana Corporation, and Humana hadn't experienced quite the consistency of WellPoint or United. But I do want you to notice how earnings have tracked its stock price has tracked the earnings of this company. Once again, we have a company normally trading at 18 times earnings, currently trading at 7 times earnings. Again, a good balance sheet, very little debt relative to its business. It's underperformed the market relative to the other two, but keep in mind it's trading at less than half its normal valuation. So there you have it. There's a lot of uncertainty. These stocks the market doesn't like uncertainty, so all these companies, hopefully you've been able to note from this blog, are trading at historically very low valuations. The question is, what's going to happen to the future earnings? If you can get comfortable with that, you could be looking at bargains here. But as usual, I recommend you do your own homework and watch what's going on in healthcare legislation very, very carefully. If there isn't a major public plan, then it ultimately could be a positive, or at least eliminate a overhang negative off of these companies. There could be some price appreciation, but what has normally been very conservative companies are probably riskier than they've ever been. This is Chuck Carville saying, hope this gave you some insight into the current healthcare legislation and the private insurers that are serving the healthcare market. I'll look forward to talking to you again tomorrow. Thanks for listening.